Smart 24, driving business.
Very much for us. You're watching Smart 24. Remember the show Financial Market by old number one. Under their ZAP, we bring you to across Africa with the convenience now, of course, go down to and that's the exchange on the secondary market activity of the treasury bond market. Now, talking about the stock exchange, recently we are, of course, witnessing something, of course, we didn't expect. Airtel Uganda, which is supposed to have listed this year, is actually requested last week for a postponement to which the Uganda Communications Commission actually consented. Now, Airtel, according to the UCC Act, Amendment 2020, every telecommunications company in the country is supposed to list at least 20% of its stake on the Uganda Stock Exchange. Currently, Airtel is still overriding that and requesting for a postponement, with reasons, of course, based on how bad the market appears to be currently. And I want to bring in Counsel Chizito here on the legal side of things, but also on the implication of this on the business of the Uganda Securities Exchange. So, talking about MTN last year, MTN listed, and we've seen its performance this year. It hasn't been the best, but at least they have tried to put up with the tough environment in which, of course, the markets have been going through. What's your opinion on Airtel's failure to list this time round?
Airtel failing to list, for me, I see it as a convenient excuse. It's just a convenient excuse. Well, you see, most companies that list in this country don't list to raise money. Or they don't list because they want good fundamentals and that they want to issue shares. No, if you look at the history of that stock market, the first companies that listed as a requirement of privatization move by the IMF and the World Bank. When they came here, Stanbic Bank was that boss because the IMF, when they were selling Uganda commercial bank assets, one of the conditions was there will be a stock market and you will list. When you look at companies again like MTN, they had drugs to list on that exchange. There is no precedent of Airtel willfully listing in any African jurisdiction. It's not there. If you go to Nigeria, Ghana, you go to any country, they have always been forced. So it was a tactic, a delay tactic to buy time. And you don't blame them, of course. Like I've told you, it's a convenient excuse that we have unfavorable market conditions, therefore we cannot list on the stock market right now. Give us some time. They don't want to be embarrassed the way MTN was last year with an undersubscription. But again, it depends on how you structure an IPO in hard times. I know the global IPO market has not been healthy, but you can't use it as an excuse not to list on the boss. No. You have to structure the IPO with the right pricing, with the right everything at the right time. You don't just say, unfavorable market conditions, we are not going to list on the market. No, that's just a convenient excuse. But I again wouldn't blame them, because if you look at certain CMA, and well, I read the Monitor story where they stated that the CEO was involved at a consultancy basis on the decision that was made by UCC. If you look at the certain regulations by capital markets authority, they of course give Airtel a convenient excuse. Right now, you have listing fees whose legal status is in dispute. You're listing your securities on the stock market, they're telling you to pay 1 billion, a percentage of shares issued. That's an issue. You have issuers in the market being given new regulations, which I know the whole thing that I think were beaten down by stakeholders, that state issuers to register, issuer. The whole thing, I feel it's just a convenient excuse, and you can't blame them for coming up with it because it's a very good one. But at the end of the day, there is a fundamental problem with the financial markets in this country. You can never be a vibrant economy without having a deep financial sector. That's a challenge. With when MTN listed a year later, not only are their shares subscribed, but they are also trading below the IPO price.
Yeah, since listing.
So, under these conditions, Airtel, I wouldn't blame them. They are right, but I still feel they used that as a convenient excuse. There is no market on this continent where Airtel has listed willfully, and the other cardinal principle is Airtel is not listing to raise capital. No, that's not it. You see, when you become a publicly listed company in any country, when you issue your securities on an exchange as a company, you become a public company. And by becoming public, it means everything you do is under scrutiny. Your financial accounts must be publicized, your AGMs must be adequately advertised, all your transactions become public. So that is the scrutiny that I believe Airtel is trying to delay by telling us that they sought an extension because of unfavorable market conditions.
When you talk about the forcing, the US stock markets, for example, you're looking at companies like Apple, Amazon listing on the NASDAQ or the New York Stock Exchanges, and they're actually competing to remain, for example, on the S&P 500, to remain on the NASDAQ Composite and the Dow Jones. They're basically trying to keep up with the standards of these because they are benefiting from this. What's lacking in our, the capital markets here? Why do we really have to force companies, so to say, to list? Can't we have a better market? And what is really the holdup that is actually not giving us that?
Those markets in the US, maybe a London Stock Exchange also, those big stock exchanges, there's an incentive to list because you get some visibility. And the other reason why Facebook, Amazon, and Uber could list on the New York Stock Exchange is because these are venture capital backed companies that need to make an exit for early investors. They have to raise money to help people who invest in them on the earlier rounds of venture capital to exit the investment. And those are deep markets for that. You saw with Jumia, they would have listed on the Johannesburg Stock Exchange or the Nairobi Stock Exchange. They chose to list on New York Securities Exchange. Not because the market here is non-liquid, no. But the early investors in Jumia, before 2018, they felt that it serves them better if they go and raise capital in a more deep and liquid market like the New York Securities Exchange, and also to create visibility for the company, much as they don't have any operations in the US. So what is lacking here, and I'll give you a very good example of why Jumia, I think the best thing that illustrates what is wrong with the African stock markets is the decision for Jumia, which is a predominantly African, in quotes, an African startup, to choose to do a listing on the New York Stock Exchange. Why? You don't have liquid markets too. The cultural perception of regulators like in CMA3. In Africa, Uganda particularly, I think even in Africa, we are not into the habit of listing growth businesses. The ones that have a high growth potential. I know, and I think again recently they launched at Uganda Securities Exchange, and for a long time we've had the GEMS.
Yes.
The alternative aims, that GEMS where it's for growth companies.
Yes.
But the incentives to build a growth, if you're a Jumia and you're in a growth segment of a stock of a growth segment of the US, it doesn't serve your interests. Here we are into listing profit companies. But even the profit companies like MTN and Airtel, you have to force them to list because they don't go in. There's no much visibility they will get from listing on the stock market in Uganda. If anything, it will come with encumbrances of more scrutiny, looking at your financials, who is the shareholder here, why are you transacting like this? And my firm belief is that Airtel is doing its best to buy time and not to be put under the microscope like MTN has been, like Umeme, and even Umeme, by the way, Umeme primarily in 2014 listed to help an early investor exit its investment. That was Actis, I think it was a British pension fund. Actis was an early investor in Umeme, and then in 2012, Umeme lists, I think, at 275 shillings per share to help Actis exit its investment. But interesting, Umeme did well. If you look at Umeme's performance on the stock exchange, unlike MTN, between 2012 and when the first time I interacted with the stock exchange fundamental without being an observer was in 2017. At that time, the price of Umeme was at 430 shillings. It's like 50, 70 times, it was 100 times more than its IPO price, which was 270 shillings, 275 shillings. So Umeme did well. And of course, once in a while, Umeme traded below this IPO price, but at least not fundamentally. With MTN, their listing was not willful. And even the way they structured their IPO, the selling shareholder was MTN, they don't create new shares. They don't dilute existing shareholders. So what they did, the MTN group, which held 96% shares, sold 20%. The selling shareholder sold 20% of his stake to those who want to buy shares through the stock exchange. So they did not raise it to raise capital, and even the little capital they got it to give the selling shareholder, which money I'm sure ended up in Mauritius anyway. By now it should be in Mauritius, where MTN International is listed before you go to MTN Group. So I don't think, if you look at most of the companies that have listed, and I'll go back to what I was telling you earlier, most of the companies that have listed in Uganda, most of the companies that have listed their shares on the stock market have done so for three reasons. The IMF, because of IMF structured adjustment programs, where companies like Stanbic Bank that bought assets of Ghana Commercial Bank were told to list within a certain period. Then you have Airtel and MTN, who have been making profit and have not, and their financials have not been easily scrutinized by the Revenue Authority. So when you list, all this information becomes public. So they were forced to list because they had to list. And for other reasons, also to stop or to limit what you would call illicit financial flows, where money just goes out. When you list, government can have control on how much money can go out. Nigeria also put MTN under scrutiny to list because money was going out because of money repatriation. So all those are the considerations. In Africa, most companies don't list to raise money. Rarely. That is a very small consideration. Most list because it's a regulatory requirement, or because they have to list, or because the World Bank came and did some structural adjustment program and told them, please, when you sell the assets of this company and you buy it, you list. So that's basically it.
Thank you. Now getting over to the Umeme story. Thursday, the Umeme came out and actually confirmed that they will not be renewing their contract, which is going to expire in 2025 in March. And of course, this is under their concession agreement, which they had with the government of Uganda to serve the public of Uganda for 20 years, from 2004. And currently that is expiring in 2025, which is not being renewed. And of course, very many people came out to criticize, and some thought it was not fair for Umeme not to renew their contract. And so many also fears from shareholders who are also having shares in the company. What's your take on this particular topic?
Personally, I am waiting to see a customer who is happy that Umeme did not renew the Umeme concession. I think
everyone is sad.
Most people are happy that they are leaving. Really, who is not happy that I'm just saying? Most people I have interacted with are actually not shedding a tear. Apart from those who are employed in Umeme, who have relatives who are paying fees and tuition for them because they are getting living from Umeme.
Yes.
But the vast majority of the public is like, they even quite like, anyway, they would have gone along. But going back to the discussion, number one, shareholders. I don't think the shareholders of Umeme are sad that they are not renewing. If you look at the Umeme concession, there is a lock-in exit price of 600 shillings for the 622 billion shares that have been issued by Umeme. So the concession states that in the event that Umeme does not, the concession of Umeme states that in the event that government does not renew the concession, that the exit price that they will buy out existing shareholders, which shares are 622 billion, will be 600 shillings. It is that is a benefit, because if they are to go by the price of the market determined price of the stock market, it is 180 or 200, between 180 shillings to 200 shillings per share. If you are a shareholder, they're not renewing NSSF. If you're a shareholder in Umeme and they inform you today that in case we don't renew your concession, we shall buy you out at a rate of 600 shillings per share, not the market determined 200 shillings on the stock market. Why would you be sad? That's number one. Number two, I remember Monitor quoted me 2 weeks ago when this issue of women had just come up, when I think a story was done on the negotiations had broken down and the minister had said, "I don't renewing." And that story, in that new Monitor story, I was referenced as saying that it is good for corporate governance to always tell the internal and external stakeholders in a company about the state of your concession. I'm happy they've done it now. But Umeme leaving, I think Umeme was a very unfair concession to start with. Number one, any amount above $13 million was supposed to be arbitrated in London. Number two, if you look at the cost of electricity, I'm not trying to say that Umeme is the only player that has made our tariff go up as domestic consumers, but they had a contribution. The concession states that Umeme must get a 20% return on investment for whatever investment it makes in the electricity sector, in the electricity network, and the grid. That 20% is recoverable through the tariff, meaning that when they are computing the amount of money, when ERA is computing the amount of money to be paid, they reference what was negotiated in the concession. The 20% is in there. If you look at the tariff structure of the cost, how they arrive at it, the people who generate the electricity, UEGCL, takes 60% of the money recoverable through our tariff, meaning it inflates the tariff. Then the transmission segment, UETCL, takes about 11%. Now, the distributors, where Umeme was, they take 33%. But that is inclusive of 20% return on investment. For whatever investment Umeme makes, they have to recover 20% through the tariff that we and you and I pay. So the concession was, and another problem I had with the Umeme concession is it had a monopoly over distribution of power. If today the government woke up and said we are going to bypass women in the distribution of energy, government must compensate women for that loss, having bypassed women, and on top of compensating for that loss, they have to pay them 75% of that loss. In other words, you pay women for the loss, for bypassing them, and then when they compute the loss, you have to add 75% of the loss on top of the loss. For bypassing women, in the event you find there, you have made them fail to recover their money through the tariff. So the concession was a bad agreement, and I'm not trying to say, because the energy sector is a complicated animal altogether. It is not only women that has inflated the cost of electricity. No, the generators actually take the biggest share, 60%. Umeme is part of the problem. But once you deal with Umeme, you are starting a good discussion. So when you deal with Umeme, because I'm also told this they're not renewing. When you deal with Umeme, and me, I'm thinking the shareholders of Umeme should not be the big crying crocodile tears. They should be happy. Because the concession states that the government will compensate Umeme shareholders 600 shillings per share. That's the exit price for shareholders. So you should be happy. The people who should be crying are people who are going to lose jobs. I don't know the strategy that the government has put in place to absorb I think 10,000 jobs.
Probably another company will come on board.
That's my feeling. I feel these things of Umeme, they may tell us Umeme is going, and then we have another Umeme, different name. You know, things. But anyway, I can't say I'm happy that Umeme is leaving, but I don't think the public is saddened that Umeme is leaving. When people have been complaining about Umeme, National Water and Sewage Corporation, so these are people who, for lack of a better word, of being polite, the public is just quietly observing and like, okay, you're leaving, Umeme is leaving, oh, fine.
Currently, ladies and gentlemen, Umeme is trading at exactly 210.0 Ghana shillings on the stock exchange. They have over 1.62 billion. I think this would be a great opportunity if you could actually get into the stock.
But you see, this is what I'm telling people. Yeah? I think it is a good move now to take Umeme private. I think Umeme should even be delisted from that stock exchange as early as now. They think they should undertake the process of taking the company private again and delist it from the stock market. So that this arrangement is done in that way. I don't think Umeme should be under, now that they're not renewing their concession, their continued existence is going to manipulate that price a bit. You might see abnormal price surges.
Exactly.
So I feel what they should do now is to delist that company, to delist the securities that are listed on the market, take the company private, and they do their undertakings.
Yeah.
Because I don't think now them listing serves any benefit. Because now the purpose for which they existed, and when you read their prospectus, that was the purpose for which existed. They had a 20-year concession, which is expiring. So if people bought into your company knowing you have a 20-year concession which is not being renewed, and you're still in the stock market, that means that the prospectus has been overtaken by events, technically. So in my view, and advice is women should be taken private. They should delist the company from the stock market, and then that undertaking can be taken in a private fashion. That's what I think. It's an opinion anyway.
Okay. Thank you very much, Councillor Ruiz. Our time is fast spent, but just in about 2 minutes, your opinion on FTX getting, of course, to run bankrupt. What really could have caused this, and could there have been something better to be done?
Number one, FTX, I think Sam Bankman-Fried, who was the CEO of
SBF, the CEO.
Yes, I think he was running a Ponzi scheme. No, I'm being very honest. Look at this way. Every cryptocurrency exchange has what you call a native token. Now, Binance has its native token, and FTX has its native token. It's cryptocurrency. You can call it its own cryptocurrency called FTT. Now, how did they keep the value of that FTT rolling? What they did is that if you buy into the FTT token, they promised that the proceeds from FTX will be used to reinvest and take out excess FTT out of circulation, so that the price goes up. So when you're running such a native token in that way, doing a Ponzi scheme, it's bound to collapse. And the problem was the CEO of the exchange had two entities. There was FTX International based in Bahamas. There was FTX US based in Delaware. The problem is they went into what you would call jurisdiction shopping, and lawyers know it. People who want to hide in financial information or avoid taxes normally go around shopping for jurisdictions where they can incorporate. When you look at the bankruptcy filings that were done on FTX, I think the person who did the unwinding of Enron, what you would call the most fraudulent operation that the corporate world has ever seen, the Enron liquidator or the Enron lawyer who did the bankruptcy proceedings is now the one that is in charge of FTX. When you look at his Chapter 11 filings, he states that he had never seen such a loss, such a corporate failure operation that is full of untrustworthy financial information. So this is it, and this is what I think happened. SBF used customers' money to do betting. Normally what happens, if you're in the capital markets, you have to separate customers' money from your money as the exchange. They mixed up everything. There was no good corporate governance. These are a series. People are running FTX, and I'm sorry for this, it's a morning show, afternoon show. People are running FTX where millennials were in love relationships with one another who are trying to run a business operation. So what happened is they did not have good corporate governance in place. Corporate governance led to financial liquidity issues. Liquidity issues led to insolvency problems. So at the end of the day, and I've made this argument before, is that in Uganda, we need to have a framework that regulates cryptocurrency exchanges. And we're not regulating their operations, we're regulating behavior. Simple things like proof of reserves. If you're telling us that we are investing money with you, show us your proof of reserves. Show us on the blockchain you have access to this amount of Bitcoin. But right now, the discussion going on after in the wake of collapse, of course, this year, it's not only FTX that has collapsed, it's the biggest collapse we have seen, but Celsius has collapsed, Mt. Gox collapsed years ago, and BlockFi. You have BlockFi and Celsius has collapsed this year. FTX is the recent collapse in a very long series of collapses. So my 2 cents on FTX is, if you're going to invest in a cryptocurrency via a cryptocurrency exchange, it's always good to inquire into where it's registered. And personally, I feel that if you see a cryptocurrency exchange that's registered in those St. Vincent Caribbean islands, that's a no-go area. Because that is what you call jurisdiction shopping. They go to a jurisdiction, they know they can hide. Even now, when you look at what's happening to FTX, when they filed bankruptcy proceedings in Delaware and they appointed an equivalent of a liquidator or an administrator in Ugandan law, the Bahamian regulators also appointed a liquidator, and they filed proceedings in the Delaware court that were challenging proceedings going on in Delaware, saying that the primary jurisdiction of FTX is Bahamas. Now, honestly, you see, the FTX story goes on. I feel even we're out of time. But my 2 cents on this is, if you're investing in a cryptocurrency exchange, do not leave your money or your crypto on those exchanges. Always put them in cold storage. There are always those gadgets that help you put money into cold. Or put it off. Only put money on exchange that you're going to trade in the next 1-2 hours. Yeah. But the dilemma we have seen with the FTX, and this is advice I will give to people out there, if you are trading money or crypto via cryptocurrency exchange, do not leave your crypto or your money on those exchanges. Always put it off your exchange into your private wallet, or if not a private wallet, into cold storage. Because the money you leave on these exchanges, if you read the terms and conditions of a cryptocurrency exchange like Celsius that collapsed, they say their terms and conditions for some cryptocurrency exchanges, they state that the money you leave on the exchange does not belong to you, or the crypto they hold on your behalf does not belong to you. FTX was a fraudulent operation because for them, if you read their terms and conditions, they said that the money and the crypto assets you put on the exchange don't belong to them. But they went on to lend out people's assets and even use them to trade. Sam Bankman-Fried had Alameda Exchange, which had an account in FTX, with one of the biggest accounts. Now, he used private people's money and crypto and gave it to his Alameda Exchange and created an 8 billion hole. When you go, and the biggest I blame for propping up FTX are the venture capital backers like SoftBank and they are actually and Sequoia Capital. These are the people who gave Sam Bankman-Fried money when he did not have a CFO, he did not have a board, and their excuse was this was a highly disruptive industry. But you cannot be, okay, I know we may be using the benefit of hindsight, but really, you can, and one of the reasons why Sam Bankman-Fried got all the venture capital money is that he was playing video games where you're talking to VC investors and they gave him money. As in, you can't, anyway, maybe we're using benefit of hindsight, you can't blame them, but the whole FTX saga, me personally, I used to tell people like Barry and Skill Heaven, that's a Ponzi scheme. They actually used to say that I'm old fashioned, but I don't even know. That operation in FTX was a Ponzi scheme. Yes. Because at the time I was at MARKERT and they were launching.
Due to collapse.
Yes, there was a time I was at MARKERT and Skill Heaven was marketing FTX Africa on the behalf of FTX. I told them this is a fraudulent scheme. You people may not know what you are marketing. Yeah. But the way, and shortly after, the South African Financial Conduct Authority came out and warned the public against FTX. That was early as February 2022. So,
thank you so much, Council, for those insights, and it was very good having you.
Well, thank you very much for having me too.
Yeah. Ladies and gentlemen, there you have it. This is Financial Markets, where we bring the discussion of the top headlines in the financial markets world here on your TV set. The show is brought to you by OTEX East Africa and the ZABU initiative, where you can be able to buy different treasury bonds across East Africa by simply now dialing *292#. OTEX East Africa doing something new. And now just a few updates coming in from the Uganda Stock Exchange. As per yesterday's trades, we just had about 3 participants in the market, and these were Wumeme, Stanbic and MTN. Wumeme topping the table in terms of participation with a total volume of about 19,000 shares that were bought. However, the stock market price is still stuck at 210 shillings for Wumeme, and of course, following stories that the company will be exiting soon, definitely that could have an impact on that share price there. The benchmark index, which is the all-share index, went up just about 0.17 points, closing at 1,201 points at the Uganda Stock Exchange, and the local company index is currently maintained at exactly 268.57 points. And that's it, what of course we had for you today. Remember to follow us on our Twitter at Smart24TV, and of course more business shows coming your way from Smart24 TV. I'll catch you same time, same place next week. Bye for now.